So when you're trading, when you're jumping into the trading realm, our goal automatically is like, yo, I need to make 5 grand, right? That was for me when I first started, you know. I need to make X amount of dollars in order for me to jump into this whole trading deal. I need to make this. And then you start to build on that, just that one thought of like, okay, now I have to, I'm creating a false belief like I have to make money every month. This is Trading Topic Tuesdays. Welcome. If you guys are out there watching a replay, definitely get the notepad out. Tonight's going to be good. It's going to be good. We do these Trading Topic Tuesdays for you guys. Well, I mean, in addition to us talking, because we love talking, but we come on here, we want to share some content with you guys, some knowledge, our experience, talk anything and everything trading. This call is for you guys. We put this on every Tuesday. It's free. You could bring your friends, your mama, you could bring your, family, whoever wants to learn about trading, bring them here. We have this awesome conversation that we put on. Don't mind the voice, guys. We're feeling under the weather a little bit, so bear with me with that. But on top of that, tonight's topic is gonna be good. It's gonna be part one of a two-part process. We kind of coined it, process over profits, or aka ditch the paycheck mentality. Now with that being said, let me go. I prepared a nice slide deck for you guys. Let me go share that real quick. Process over profits. I mean, this was thanks to Reid for that one right there. Process over profits.
Part one. This is part one of
This is
process
part
over
one.
profit.
So we're
Yes.
switching it up
Part series here.
yeah, for this, and we're just trying to dive in, take a little bit step deeper into the mindset behind trading, because a lot of fear out there. I think the fear meter is pegging right now for all retail investors or general investors in the market. Lots of fear. And so how do you combat that, right? We're kind of taking that approach. We're gonna, get into an angle where, hey, there's gonna be a drawdown period. People will be in a period of losing money. We don't like that. Nobody does, but that's that's just a fact, right? Tonight's topic, ditch the paycheck mentality. I mean, it's such a key thing to start fixing our perspective with the markets, fixing our perspective of like, okay, let me go jump into this trading thing. I see everyone making money every single day, every single week, making thousands. They could just change their lives, right? And that's kind of what the sad thing what the media is portraying right now, and to the average or the new person coming into the trading. And it's been around. Besides, before TikTok, before Instagram, there was still the internet, and that was how I got started with it, was through YouTube, or even before that was through an article I saw online on Google, of this lady who's trading forex, and she coined the article. It's like $1 million trading, making, or $1 million forex trading or something. So that caught my eye, and when I stumbled across that article, I was definitely intrigued. I was definitely intrigued because they're talking about money, and growing up for me, money wasn't really taught in my household. It wasn't talked about. This article saying they're making so much money within a short amount of time, that equals freedom for me. That's the way I saw it, right? With that, like, it was just intriguing to me. It triggered this new spark inside of me, knowing that there's a world out there that we can potentially hit. You know what I mean? I went into the whole thing of learning how to trade, understanding it, and just soaking it in. And I could not just stop. Like, it was just a snowball. Like, one thing started, domino effect, and it kept going. Books, courses, audio books, podcasts, whatever I could get my hands on, webinars. It just kept me going, and it was that flame that was was lit inside of me, and it was crazy. My wife noticed it. Everybody else noticed it. I was like, Glenn, what are you up to? I'm trying to learn this trading thing. I need to know, because this is gonna be the thing that takes me out of my career. I made that decision up back years ago, and I still believe into it. Now we're fast forward into present day, this whole idea of ditching the paycheck mentality. Like, we're gonna bring this into awareness of, we're gonna have to unpack that for you guys. You know what I mean? I had to unpack it over the years, setting the right expectations when it comes to trading, taking what we've learned and what we grew up with. A lot of people have went to school, a lot of people got jobs, and then a lot of people expected a paycheck every 2 weeks or every week or whatever, however your payroll was set up. And so that is kind of where we're starting off with this topic tonight, and then we're gonna dig in deep a little bit into it. But before we continue on, Reid, you can go ahead and share like what that means to you, and how what your journey is leading up to this. You know what I mean?
Yeah, just came to mind as you're discussing all that ditch the paycheck mentality. The word to sum that up is security, right? Like, oh, security in receiving that paycheck every single week or every 2 weeks. There's a time frame where I know that I'm going to get paid. Whereas trading is just a different stories. So I mean, like, I got into trading like everyone else because of the money. I mean, the money's amazing. Like, yeah, in Hawaii, we don't grow up with millionaires around us and a lot of wealth around us. And so it's just it's a kind of, yeah, it's a different mindset. And like, when you do start to make money in Hawaii, a lot of that stigma is like, oh, this person's high maka maka, meaning like they got a high head on their shoulders. Oh, they think they're better than everyone. And that's like the default thought process of a lot of people that I grew up with anyway. And so I heard about stocks and how a mutual friend of mine, like, he got back from a deployment and made thousands of dollars off of his investment. I'm like, man, like, that's what I want to do, where you just put your money aside, forget about it essentially, and make a lot of money. However, I didn't like this whole waking up at 3:30 a.m., 4 a.m. in Hawaii and only trading till like 9 a.m., especially when we have school. I was going to college then, and then especially if you have a job, like it wasn't feasible for me. And so I began to do more research. I'm like, you know what, I don't want to do stocks, but there's got to be another way to make money in the market. And that's where I discovered Forex, foreign exchange. To keep it short and simple, the money kept me interested, and it kept me interested enough to learn and want to grow, maybe not grow, or how to make more of it, essentially. Like, how can I trade stocks 24/7? That's really what I was looking for. And that 24 hour, 5 days a week is what the Forex market provided. And so overall, deep down, the money kept me around, or yeah, it kept me going, but it didn't, it won't keep you around forever. And so overall, what I found out was, like, I really just wanted to improve my lifestyle. And that's essentially what my core driving was. I wanted to just take care of my loved ones. And so, using trading as that financial freedom, or that to use trading as a tool for financial freedom, I just kept asking myself, what do I have to learn? And what do I have to do to finally obtain this freedom? And that's essentially where, like, I ditched that paycheck mentality. Like, I don't care how long it takes. I don't care if I get paid once a month or 2 times a month, like, that's, as long as I'm making money full-time trading, like, that is the goal right there. And that's essentially like a wrap up of my story.
So we wanted to ditch. I could say that we both wanted to ditch the paycheck mentality, but our mindset wasn't there. We both wanted freedom. We both wanted a new, different lifestyle. We both wanted the money, but one thing that was lagging when we first started, right, was the mindset, the maturity there. We were kind of lacking. And so 3 challenges we encountered when starting to trade, or going through the process, or for those who've already been in it for a year or so, maybe you guys encountered this yourselves already. So greed and ego takes over when first approaching trading. I mean, we shared our stories a few times already with you guys about that greed and ego. For me, it was greed. I was like, yo, this is a way to just print money. Like, give me some more, right? Let me trade again. Let me trade some more. And so those are the things, like, that's something to acknowledge. I mean, it's gonna be there. I mean, as we go through the conversation, we don't want to. I don't want to spend too much time on Green Eagle because it's such a dense topic. Those are dense topics. It deserves to have its own conversation. Number two, always have to be working. So let's elaborate on that. Always have to be working. Meaning, a lot of people need to, when you're starting to trade, right? And then two and three is going to relate to each other. When you start to trade, you're like, oh, okay, I got to be constantly looking at the charts. I got to be constantly back testing, constantly scanning, looking for new opportunities, new trades, watching the news. Oh, so and so is saying this. Oh, Elon just tweeted this. And yes, working is hard working is good, but it could subconsciously start lead you to start to overtrade, being overexposed in the markets. And so that was just like one another challenge that we've encountered throughout our time. And the hustle culture, right? You see that every day. Motivate hashtag motivation Monday. You got all these people, these gurus just posting, social media influencers, whatever, whatever. And it kind of gives you a feeling of like, oh, I'm being left behind, guys. Right? Who could say that? Some like when
Yeah, we all have.
you see that person posting and you're like, oh, dude, they're in Dubai. Like, what am I doing? I feel it. It is what it is. We got
I
other.
would say it's motivating to a point, and it's inspirational, but when it's constantly in living your head rent free, that's when it becomes an issue, when you're constantly thinking of like, I
Yeah,
gotta work harder, I gotta work harder. You gotta always do a self-reflection and see how far you've come.
yeah. No, no. I mean, that's exactly because we're talking about the challenges we're encountering when it comes to starting to ditch the paycheck mentality. What's up, brother Drew? Thanks for joining in. With just to catch you up, we're targeting this whole topic on ditching the paycheck mentality, the mindset behind it. You know what I mean? Of course, we all want to have paycheck day every day. Okay, not just 2 weeks. All right. So, this is something that through the process, this is just going through it. It's gonna lead to more profits. Okay. So yeah, the hustle culture, the whole idea of like just grinding, blah blah blah, it sparks many things. A comparison trap, FOMO. Um, I should be doing this. You start to veer off track, and so those are things you just gotta really be careful. And because I got friends who post every day, and they're killing it, and because I have a relationship with them, dude, I'm rooting for them. They're posting, they're doing this, they're meeting this person, blah blah blah, like doing the things I want to do. I'm like, dude, that's motivating. And so, I guess to put in, there's gonna be differences compared from like someone to like a total stranger, and it comes to trading too. um, all these people are making tons of money, and then they're DMing you. I got a 90% win rate, bro. Give me $1,000. So
Especially when you're starting off, that could be very poisonous and dangerous for your trading career.
yeah, it's
You begin to
it's
believe that it's possible, or that I should be doing that.
so as we starting, digging more into this mentality of having the paycheck mentality. Let's talk about some of those characteristics. My job pays me X, and all I have to do is make X a month. So, meaning wherever we are in our careers or jobs or whatever, we have a benchmark, okay? Living expenses. People gotta live, people gotta eat, pay bills to pay, take care of loved ones. That's just that, right? And so, when it comes to person A mentality, we're talking about this person A is going to be the one who has a career, 9 to 5. Um, all they know is receiving a paycheck. They know working for an employer. They know getting secure, getting a stable job, right? So limiting yourself to a dollar figure amount. So when we're getting to our job and we're looking at like a salary or whatever, and it pays you, X amount, just say, 4 or 5 grand a month, right? That's our standard basis. And in our minds, mentally, what that does is like, okay, whatever I do in a month, that's worth 5 grand. And it does all these other things where it's, okay, now my value is 5 grand. I cannot go out to the job marketplace and expect to make less because this is my new standard, right? So when you're trading, when you're jumping into the trading realm, our goal automatically is like, yo, I need to make 5 grand, right? That was for me when I first started, I need to make X amount of dollars in order for me to jump into this whole trading deal. I need to make this. And then you start to build on that, just that one thought of like, okay, now I have to, I'm creating a false belief like I have to make money every month. Here's another way to look at it, guys. You're saying you have to be right in the market every single month, X amount of percentage, in order for you to take home your goal, which is your paycheck, right? So you're kind of saying like, hey, I'm going to the market and I'm gonna expect the market to pay me out my expenses every month. That's the false belief. That's where these things start to creep in, guys. Also, it does a false sense of security, right? We thought our jobs creates the security. Yes, to a certain degree. We're not jobless, of course, but we're talking about the mentality behind with this whole idea, right? With person A. So a lot of us can relate to person A, plain and simple. No one was born a trader. Everyone has a job, worked the job at one point, right? And so, of course, this is kind of like where we're starting from, right? Reason why I bring this up because this is very, just wanting to have you guys be aware, right? These are things that's instilled in us and it's going to be there and it's going to affect us when we make trading decisions. So let's talk about person B mentality. We kind of coined this entrepreneurship mentality. Oh, you guys are good so far? Thumbs up. This is good
Yo,
stuff.
I'm good. Yeah, I
Yeah.
like it.
Okay,
I'm
good,
going
good,
good.
good.
I could definitely rate to person A when I first started. Just
Automatic.
trying to make. All I need to do is make X amount of dollars, $2,000. It's such a low bar for me at the time, but that's what I was going for.
What's up, James? What's up, Drew? Thanks for joining in. We're just talking about ditching the whole paycheck mentality. Um, so now we're shifting into person B, right? And these are just examples, and this is for everyone to understand the thinking behind it, why we're doing this, why this is relevant, So we got the entrepreneurship mentality or the trading mentality. You grind out, you lose, you overcome a bunch of challenges. You don't get paid for the first few years of doing this endeavor, you know. Amazon started in the garage, Apple started in the garage. Nobody knew who they were in the first few years. And then year after year, like so right now their like pay scale, their paycheck schedule is like negative, okay? Right? They're borrowing money for rent to be like, "Ma, I need to move back in. I got this great idea. This thing called Forex, Mom. By the way, can you lend me my first account? I need 5 grand." Right? So that could be it. I'm sure there's someone who did that. Or they pulled a quick one with when Uncle Sam was dishing out the stimulus checks. They straight opened up a new Robinhood account or whatever, right? Fidelity. So person B, they're like, oh, you know what? They're not falling back on the paycheck mentality. They're not counting on that security. They're like, I know that what I'm doing is gonna get me to the next level, right? So year after year, showing up. Like I think there was a story with the guy with GoPro. He gave himself, I think, 7 years or something to like live with family, and he's like, if I don't make this work, then I will. Worst case scenario, I'll go get a job. And so, sure enough, everyone knows GoPro. He made it, right? And so he landed a big deal. And so years after years of showing up, you're gonna land a big your first big score. Sitting and not working can pay off. Meaning, when it comes to showing up, doing your homework, being prepared to trade the markets, even though like you're watching a market and you don't take a trade that day, that's totally fine. Why? What you're doing? You're preserving capital. And then say you go in, take another trade, you fail. At least you're failing forward. You continue on. You start learning. You're like, you know what? Maybe I shouldn't trade during FOMC or when Mr. Powell's making a announcement, right? Then you start adapting to the challenges. Oh crap! Like my signal sucks, or you know, my phone. I fat fingered an order on my phone. Blah blah blah. So this person's thinking is very different from person A, and so the whole idea of like now we got to go back to ourselves and do a little assessment, right? Like, okay, here's where I'm at. Maybe I'm leaning at person A, and I see this, and that happening. And I'm connecting why I make those decisions in my trading because of this, and that. You know what I mean? Let me just take a swig of water real quick. Reid, I don't know if you want to chime in on anything.
Yeah, I mean, it comes like the question comes like, which path would we prefer? Do we want to go with A and keep thinking that mentality, because that's actually detrimental to trading. That's gonna affect us in a negative sense where we're only like, I know a specific example was for me. I was person A when I was starting off because my mentors taught me you need to be green every single month. You're not consistent unless you're making green every single month. And so I went 3 months positive, and then on the fourth month, I actually was in the red. I lost, but it wasn't by much. It was only like 3%. And you and me know now that like through maturity and experience that -4% drawdown is like super manini, super small compared to like just the long-term strategies. And if the edge plays out and it's giving me 3 green months and just 1 red month, I'm not a failure as a trader. But that my mentality, like we mentioned, that I love that quote in the beginning, is our mindset wasn't caught up to that paycheck mentality. I didn't completely ditch that paycheck mentality. I thought I always had to be turning green, always having to make profit. But like it only took years later to realize that no, even hedge funds, professional traders, multi-million-dollar accounts have red months, and it's okay. You just got to trust and follow that edge. And that's where that mindset, that mentality for person B needed to come in. And so like, I'd like to believe that I'm a lot more aware of it, my trading, but it's always a learning process, always becoming aware of new emotion or the same emotions, but in different aspects. Yeah, there you go. Purple Valley. This is a beautiful, beautiful example. Glenn, you want to elaborate on this one? Oh, cannot hear you.
Yeah. Oh, I want to share this with you guys because we want to show you the like behind the curtains. This is like the reality of trading, guys. This is a multi-million-dollar. I think they have 9.4 million under stats, under management. They're not the biggest fund, but they are transparent enough to show their investors, hey, this is our performance. Starting from 2016, 1, 2, 3, 4, 5 years, 5 losing years in a row, guys. That's rough. You're like, that's 60 months.
Right? Can you handle that? Like,
good.
It's rough, like I would begin to question my whole system.
And
After
then
year two.
2020, 199% return.
Incredible.
21, 8.6 return. Year to date 2022, 72.5% return. This right here, like when we're trading, guys, looking at this kind of track record, it like it helps me, it helps Reid and I because it shows us like, okay, these are guys doing the thing we want to do, and they're showing 5 year losses, but they still was able to stay in the game. That was the biggest thing. They survived their losses because they knew right around the corner was their winnings. So a lot of it, was going back to person B mentality, years of losing, losing investors' money, failing forward, learning, adapting to the challenge. What they did was mitigate their losses during these 5 years. That's really key. It's real easy. You could probably, some people, they probably would have just went kaput, just full on blow their account year 2, year 3. 30% is quite big, you know. But
I kind of had this person A thought process, like imagine being an investor or an actual trader going through, okay, the first loss is -12. Okay, that's fine. Second year, oh man, 30%. 3, 4, by year 5, you're like, you know what, I'm going to take all my money out. I don't want to invest with you anymore. Only for the next year to be 199% return. Like that's another psychological aspect that you'd have to accept. Like if you got out of that market and decided to stop trading or going with them, like it's a tough pill to swallow for sure.
yeah, and I'm sure even on the investor side, I'm sure they probably lost investors at this time. You know what I mean? And then they get that letter like, hey, after you took all your money, we made 199%. Imagine feeling that, bro.
Yeah, that's rough.
Yeah, yeah. So right now, I mean, if you're looking at the market, um, the current market status, lots of leading stocks are down 70 plus percent. Big funds are down. People's pants are, they're getting caught with their pants down. What was that saying with, I forget what Warren Buffett was saying. Like when the tide, pulls back, you can see who's swimming with their pants down or something. But
Uh,
yeah, but
sounds like a Warren Buffett thing to say.
that is right. But yeah, I mean that kind of fortifies what we're trying to get after tonight with ditching the paycheck mentality, ditching the expectation of always making money in the markets. Okay, plain and simple. Purple Valley Capital. If you guys want to go ahead, study this track record.
Put it in the chat.
Not a lot of funds do this. They're gonna have to do some form of reporting because of SEC. But excuse me, for them to be transparent like this, applaud to them. But this is the game, guys. This is the game. It's going back to 2008. That's when it first started. So what is 2022 now? 14 years. 15 years in the making, guys. Bang.
I think one thing that I just thought of is like this is journaling right here. And this is a person B mentality, because I know a person A mentality, they're not going to journal their losses. They don't want to. It's that ego that they have to overcome in the beginning. And I speak from experience here. It was difficult for me to actually go back, journal, and kind of like look at my history and look at myself and be like, okay, why did you make these mistakes? I wasn't even asking those questions. I was like, I lost. It's not me, it's the market. So that's definitely a person A mentality there. And just to go off of that, like to change from person A to person B comes a lot through reading and self-education there.
That
But you have to want to learn for sure. I didn't want to read trading books in the beginning. I'll tell you that. It was hard to do.
So like, yeah, in addition to the learning, licking your wounds from the market, losing money. That was the thing to get my attention. Losing my hard earned money in the markets because I was careless, greedy, or um, I didn't know what I didn't know. All these different things, and so that's the thing that kind of caught my attention. With like, oh, dude, I'm missing something here. What am I missing? A lot of stuff. But first, I'm missing a mindset. Having a proper, mature trading mindset. And that's what we're trying to drill in tonight, guys, or touch that, dive in a little bit with that topic because it's such a vast topic, guys. There's so much going on with the trading mindset. But at the end of the day, that is the number one thing that allows us to continue on with trading, get better, reach our goals, right? If we don't have the right mindset, um, then we can't be operating at our best. You know, for me, I've been, uh, I caught I was sick for the past week. Therefore, I didn't trade. I was not in the right mind. I'm still kind of hesitant on entering in any trades right now because I know my mind isn't where I'm supposed to be. So that's kind of example of sitting out or being smart with your capital, protecting it, being wise, because I know in my past when I would to just be gung ho about it, that was just throwing money away, literally.
And
Ah.
yeah, I think that's the worst thing that I did was like, okay, I lost $200. Okay, put $400 in. Oh, lost $200. Okay, put another $200 in. I just kept refueling the fire essentially, and without actually learning why I was losing that money. I just kept blaming the strategy, kept blaming the market. Like it was never my fault.
Yeah, it was everyone's fault except for us. Yeah, if anything, if any things stood out to you guys, love for you guys to share. If we sparked a thought that resonated with you guys for tonight's topic, come on, say what's up. But this is really good stuff. I mean, we got this recorded. This will be up for you guys later in the Mighty Networks, so you can rewatch the whole thing.
And just yeah, reminder for that. This is part 1 of 2. So next week we're going to be discussing how we should be treating trading as like a business. And it's not like, oh, this is how you create an LLC. This is how you create a sole proprietorship, or like that. So it's going to be more like on how, as a human, as us, we should be functioning more like a business. And we'll go way more in depth on that. And we're looking forward to that. It's all part of this 2-part series regarding the process over the profits. So like
Oh,
this is the first stage in that, approaching it as a process, starting with the mindset.
yeah. No, hey, James, thanks for coming on. I mean, I've seen your name a bunch of times. Finally get to see you. Thanks for jumping on and joining us. Hopefully, this was a good
Thank
conversation, your
you.
first one. We got the usual suspects here, Uncle
Yeah,
Tony and
yeah.
Andrew. But
The learners always learning.
yeah,
Awesome. Yeah, Uncle Anthony and Uncle Tony, the forex market's been a little crazy for sure. I hope you've been, keeping it a little bit. How's it, Andrew? Keeping your risk low. I, for one, still at that minus 5.5% drawdown. I'm not looking or trying to jump in the market as fast as I can. When I do jump in, I'm going to start with a low risk just to make sure that the market is going to be functioning to my strategy. Make sure that the edge is still playing out. But it is very choppy right now, very consolidating across all forex pairs. So there's no rush to get in the market. My mindset is that these opportunities will always come out, that my edge will always play out because I do kind of like what Glenn does. It's essentially trend trading. So, but within trend trading, I use patterns and indicators. So like that's, I know that the plays are going to happen. It always does happen. So that's where
yeah,
I'm at right now. No trades this week. Yeah. It's only Tuesday, but no trades for me. Glenn, how about you, man?
Yeah, the way I see it, the current market environment, it's uncomfortable for a lot of people. The way I see it is, I like volatility because that's where a lot of the profits come from. We need big market moves. We need big market moves, but the second thing is your risk management. You know, how exposed are you in your positions? Well, if you just got a loser, just cut your losses, right? Stay on the side, right? So being discouraged, how stocks trying to stay motivated. Yeah, rough. It's rough, brother Drew. It's rough. Lots of
Yeah,
stocks are off 70%, bro. So,
I
um,
mean, there's stats that are constantly outpacing each other as far as like this is the worst. First, it was the worst quarter in like, you know, 10, 15 years. Now it's the worst start to the S&P since like 1938 or something, like around the Depression time. So, guys, like this is a very unruly market right now. And it's very strange and interesting times indeed, even for Glenn and I. But we know that we're humans and humans are very predictable. We create patterns, and that's why it's so easy, or we're able to trade the market because we're predictable in that sense. And there's always going to be it's cycles. That's the word I'm looking for.
mm,
The market will always function in cycles, and it's okay. These bearish moves happen and these trends happen, so we could get in it at a discounted price. That's the way we like to look at it. So right now, for me, my personal account, I'm not recommending anything to anyone. This is just what I'm doing. I'm just putting small amounts of cash into my portfolios, and I'm just leaving it there right now. I'm not actively investing in anything right now because like this, like we just discussed, like this market is a little nuts, man. So
yeah.
just sitting on the sidelines overall.
Now, what Reed's doing super smart because he's loading up. He's putting ammo in the chamber, and so when the targets do arise, he's gonna be firing off, you know. So, real that's good. I mean, he's staying in cash, which is
It is a
not
position. Cash is
it's
a
a
position,
position,
guys.
and
Yeah.
it goes.
One thing I want to warn for everyone. I just saw this today on the tweeters, on Twitter. Um, is that people are calling the bottoms, guys.
Oh,
Don't fall into this, please. Like I literally a tweet said, I think it's the bottom, and they bought some. So they didn't disclose their positions, and I don't really know that person, but he did say that he bought or he called the bottom today, which is like oh red flag. If you looked at the charts today, is another bloodbath, you know. So just be careful of who's where your information is coming from, you know. And so like even us, like I always say this, question Glenn and I. You know, it's healthy to question and bring that question to us, bring that question to yourself. Is
yeah.
like, are we really making the right decisions? You know, so
Trust but verify, man.
yeah, trust but verify, and no one knows what the future is going to hold in the markets, especially these markets. So
Yeah.
that's just a fair warning for everyone.
So I mean, just look at the direction, guys. I mean, this is the S&P 500 ES futures. Right now we're trading at 4010, but yesterday's market. Let's go zoom in a little bit. So we tried to rally up to 4065, and we just dumped back down to create a new low. Right now, price is just hovering around. But overall, if you zoom out, guys, I mean the direction is down. So for sure, um, that's just the direction. If you can short the market, play it, play the short. You know, if I was trading right now, I would be short in this market. More short than long, that's for sure. Same for the other indices like the Nasdaq. You're going to see more of a extended move compared to the S&P. We are touching the previous lows of March last year, 2021. So that's the level we're trading at. Actually, we closed lower. So what is the next low? We're going to be at October 2020. You know, they zoomed out daily chart, 3 years, have the bigger picture, especially when you have these big moves. You know, so right now, since I'm not trading, I'm gonna be doing journaling. I'm gonna be going over my losers. All right, so that's gonna be my homework, keeping me busy.
Yeah, that is an amazing move right there. I compliment that because that this is the time, guys. Like you don't have to be. The market's shot to crap right now, and that's great time for journaling. We when the market starts picking up, then we engage in the market, and then when the market cools down, like we engage in journaling. So there's always that seesaw going on. Just wanted to bounce us what Tony said. He said the best thing to do. So the best thing to do is sit on the sidelines and add money to the account, build it up, and when time to get back in, you're loaded and ready to go. That's what I'm doing. But again, I say this with the disclosure. You guys trade the way that you are comfortable with, and yeah, that's what I encourage. Encourage capital preservation above all. That's the main right there.
Yeah, I mean, go if you guys are checking all the boxes on entry, go for it. You know, but keep your risk management as a priority. That's it. Trade this environment, learn some how this environment trades, the characteristics of the moves, the big swings, you know what I mean? You're going to have to learn how to deal with the big swings, you know? But yeah, if not, if you're not totally um comfortable, then just sit out, you know? Go do something else. Go golfing, go beach, go do whatever. Like don't you don't have to sit in front of the screen, guys. There's a world out there. This isn't metaverse, all right? Beat it.
Enjoy life, guys. Don't forget to enjoy life. Trading is a key component, but it's not everything. Yeah, gotta spend time with the family and the loved ones and in nature.
Yeah, yeah. I mean, so like, going back to Drew's comment, it's kind of tough right now. You just gotta champ it out. So step away from the markets, dude. Um, I've been away for a little bit because I was sick. So yeah, it was good. I just binged Netflix and or did whatever. Still try to keep my mind going and tune out the markets, which is health. I guess for me, it's healthy because it's just bringing back the balance or resetting yourself. So that's kind of key. In addition to saving your money, your capital, your trading capital, regain, reset your mental capital. Okay, because those two things you definitely need to go back into the market at your best, at your top performing self. So
Yeah,
when it's
I just
rough,
want to go off of that. I'm sorry, like we're at 8 o'clock already,
oh
but this
yeah,
is so hot. It's good. I love it. Is coming back to uh mentality person A mentality. It's that toxic hustle, right? Work, work, work. That leads to decision fatigue, which that may not be the best decision for the market at the time. And I like what you just said, Glenn. You take that time off, reset the mind, go watch Netflix, binge on that Netflix show that you've been missing out on. It's okay to take these breaks because you don't want burnout. Burnout will just it deteriorate your journaling, it'll deteriorate your execution in trade. So just again, yeah, coming back to enjoyment, reset the mind for sure.
that's key. That's key. And so, out of the things we said tonight, guys, it's kind of what we wanted you guys to take away, right? Go back to your mental, get reset, get aware. How are you guys doing mentally? Am I making the best decisions right now financially? Am I making the best decisions for myself mentally? Right? And so, you know, check those boxes first and then be like, okay, I can approach the market. But if not, it's okay. Chill, put it on the side. So, we if you guys have any last minute questions, we'd love to hear it out. But if not, I know we're 8:02. We want to respect everyone's time. It was always good to see you guys jumping on. You guys are freaking awesome. Um, but yeah, like I said, we have a part two coming up next week. Don't forget. and it's gonna be good. Yeah, good feedback. Yeah, awesome, guys. Yeah, thanks,
Mahalo,
man.
guys. Thank you for joining, everyone. Okay, I hope you feel better, my man.
Next week I'm gonna have my voice back, hit the high notes.
100%.
But yeah, thanks guys for coming on. Good night.